Amazon kicking off its Prime Day event today. Best Buy, Macy's, and Target also holding their own events. This as retailers face an inventory overflow and rising inflation. So can these days of discounts really help? Let's bring in former Walmart U.S. CEO Bill Simon to discuss this. He also serves on the Darden Restaurants and Hanes Brands boards. Bill, great to have you with us.
Hi, Melissa. How are you?
Good. Whenever I think of you and think of your last appearance, the word apocalyptic sticks with me in terms of describing the inventory build that Walmart has. So it looks like this could be an opportunity for a lot of retailers to just sort of dump the stuff that they have to get rid of.
Yeah, it's a really critical time. It's going to be really interesting to see what happens this week with the deals online, particularly, as you mentioned, inventory is all backed up like beyond all imagination. We've got back to school ready to kick off, and this is really the first semi-serious opportunity we've had to see how the consumer is going to react to these really, really high gas prices and the inflation, because it really hadn't kicked in around Christmas time yet.
Bill, it's Karen. Thanks for being on. Let me ask you, if you were back at Walmart or you're ahead of Target, and you're stuck with all this inventory, do you just slash as much as it takes to get it sold, or do you try to, I don't know, maximize even if you have to hang on to inventory longer?
Well, it's a balancing act, but from where they are, I mean, both of them were just really unfathomable amount over their inventory budgets. 34, I think, percent for Walmart and 40 for Target. You got to get rid of that stuff at this point because you have nowhere to hold it, and it will back up your entire system as you get ready for back to school, and then the fall, the cascade to Halloween, to Thanksgiving, to Christmas. If you're not in the right inventory during those seasons, you just honestly don't have a chance. So I think they got to get rid of it now. I'd look for the liquidators to take some of it. They're marking a lot of it down. And hopefully this, selling event online will do something to move it out.
I think the best day for Walmart was when Target said what they said, I think the next day or so. But, Bill, who sets up best for this in this environment? Is it the dollar stores, some of the specialty retailers, or any sector that you would go to underneath that retail umbrella?
Well, I think short term, the discounters, TJ Maxx, some of those guys, they'll have inventory of a quality that they're not used to getting. Liquidators, Channel Control, Dirt Cheap, some of those places. I think you could get rid of that stuff, but that's short term. In the long run, I still like the really well capitalized guys, Costco, Walmart, Target. They're going to rebound from this. This is a problem for them, but it's a speed bump, not a end of the world scenario.
Bill, you make the point that Walmart isn't having one of these sort of days like Target's sale days and Amazon Prime. They've already sort of discounted. What do you think of that strategy? There's no reason for me as a consumer to be driven to Walmart's site at this point. And so unless you're a regular, visitor to the site, you wouldn't know that they have heavy discounts. And I'm wondering if you think that they're actually getting rid of their inventory this way.
Well, I don't know. It's hard to tell, to be honest with you. There's a lot going on. Gas prices are, a massive impact to the middle class and below, which is right in Walmart's customer base. So that's got to be impacting them. They're probably challenged very heavily with margin, with inflation, as they try to hold their prices down, and selling online is dilutive to their earnings. So that combination may have led them to try to liquidate through rollbacks in stores rather than online. They got a lot of executive changes happening too. A new chief merchant in January, a new CFO in April. So there's a lot going on over there.
I know you're probably biased, but it sounds like you think that there's a lot for Walmart to contend with at this point during what happens to be one of the toughest periods in retail.
Oh, it is. It's probably one of the most difficult retail environments in the last 20 years, with what was already the changing dynamic as consumers shifted online. Now you throw in COVID, shut everything down, start it all up, supply chain issues, gas prices at historic highs, inventory coming when it's not supposed to come and not coming when it is supposed to come. It's a difficult environment, and that's why I kind of go back to the big guys. They're really, really in better shape to handle this kind of thing than some of the smaller folks or the people who are already a little bit in trouble.
You know, I know you said you're probably biased. You were at Walmart for so long, but at this point, I'm just going to ask you to entertain me with this. We play a game called Would You Rather on Fast Money. So would you rather Walmart or Target? Which one do you think is better positioned right now to deal with this inventory glut?
Probably Target.
Okay.
Target's got less in dollar amount to move than Walmart does. Walmart's got a lot to move.
All right. Bill, thank you for your candor, as always. Bill Simon, always great to speak with you. Okay, well, we got it from Bill Simon. He'd rather Target, Tim. What do you say? Unless
Has Tim ever been speechless?
Obviously, the gremlins are in Tim's mic tonight. Steve Grasso, where do you stand, Walmart or Target?
So I would rather Walmart at this point. Walmart's only down 13% year to date. Target's beaten up. I guess if you wanted to play that bounce for a Target because it's down so much more aggressively than Walmart. But I'll put in a would you rather. I'm going to say it really fast so you can't stop me. TJX, he brought up that name. He did not bring up Ross stores, ROST. That's the same type of thing that a TJ Maxx will benefit from because of this oversupply that you're seeing. And I'll leave you with this to put a bow on it. I think this is actually a positive because they're actually getting supply in where we couldn't have any supply in these stores before.
All right. Tim's back. Tim,
Hi.
what do you say?
It's a lot of fun. Well, what I heard from Bill also was when I hear speed bump and I hear a guy that really understands where there are problems and where there are cycles, and certainly talking about one of the most challenging moments in retail. But again, companies that were more than punished in terms of valuation, and Target that much cheaper than Walmart here, probably 20% cheap to Walmart on a forward multiple. But both of these companies are so well positioned. What I heard was someone saying, yeah, difficult times. But if anything, this Prime Day is truly back to school. Amazon's ready to roll. They certainly have their shipping back to where it has been. And if you look at the stock, so not the valuation argument that Walmart and Target have, but you buy Amazon here, you're basically getting AWS and you're getting the e-commerce business for free. I mean, think about that. It's really not priced into the valuation of Amazon at this point. I think comps on Amazon get a lot easier from here, and I do think that the stock, which has struggled, is in a good position longer term.
You own both Walmart and Target.
I do.
Aaron, which one do you love more?
I like Target more, despite Walmart on an inventory percentage basis doing a bit better job. Just the valuation differential Tim talked about, it's actually a little bit bigger than he talked about. So I think it's a below market multiple for Target, and I think Target is at worst an at market multiple. So Target.
Costco's June sales were up 20.4% year over year. The stock has gone from 610 all-time high down to 490. That's a pretty dramatic sell-off. The problem is it still trades close to 32 times next year's numbers, and in this environment, that's a tough comp to sort of get your arms around. So although I like Costco here, valuation is a concern, I think.